The dragons stumble from boom to bust? For decades, China's economy seemed unstoppable. Double-digit growth rates became the norm, pulling millions out of poverty and transforming the nation into a global superpower. However, the once unthinkable is happening. China's economic engine is sputtering. Growth has slowed to its lowest point in years, and alarm bells are ringing worldwide. From a ballooning property bubble to a shrinking workforce, the challenges are complex and interconnected. Understanding these factors is crucial not only for China, but for the global economy that has become deeply intertwined with the Asian giant. China's economic miracle was fueled by cheap labor, massive infrastructure investments, and surging exports. But this model, heavily reliant on debt and investment, has reached its limits. The economy is now grappling with structural issues that require difficult reforms and a shift away from the old playbook. This slowdown has profound implications for global growth, commodity prices, and geopolitical stability. The question on everyone's mind is whether China can engineer a soft landing or if it's headed for a hard crash. The answer will depend on the Chinese government's ability to navigate these challenges and implement much-needed reforms. The stakes are high, and the world is watching closely. A house of cards, China's property crisis. At the heart of China's economic woes lies a ticking time bomb, the property market. For years, the real estate sector has been a key driver of growth, accounting for nearly 30% of China's GDP. However, this growth has come at a cost, fueling an unprecedented surge in housing prices and a mountain of debt. The Three Red Lines policy, introduced in 2020 to curb excessive borrowing by developers, has backfired, pushing major players like Evergrande to the brink of collapse.
The crisis has exposed the fragility of China's financial system and shaken investor confidence. With property prices stagnating or even falling in some cities, the wealth effect that once fueled consumer spending is waning. The ripple effects of the property crisis are being felt across the economy. From construction materials to furniture sales, industries reliant on the real estate sector are experiencing a sharp downturn. Local governments, heavily dependent on land sales for revenue, are facing a fiscal crunch, further exacerbating the economic slowdown.
Lost generation, the plight of China's youth. China's economic slowdown is hitting its young generation particularly hard. The unemployment rate for those aged 16 to 24 has surged to record highs, exceeding 20% in recent months. This is partly due to a mismatch between the skills graduates possess and the jobs available in a rapidly changing economy.
The once reliable path to prosperity, a college degree followed by a stable job, is no longer a guarantee for China's youth. Many graduates are struggling to find work, settling for low-paying gigs in the gig economy, or facing long periods of unemployment. This situation is fueling social anxiety and frustration, posing a challenge to the government's legitimacy and social stability.
The lack of good job opportunities is also discouraging young couples from starting families, further exacerbating China's demographic challenges. The government is acutely aware of the problem and has introduced measures to boost youth employment, but the effectiveness of these policies remains to be seen. The graying dragon demographics and the future. China's economic slowdown is coinciding with a demographic time bomb. The country is aging rapidly, a consequence of its decades-long one-child policy. The working-age population is shrinking, while the number of retirees is soaring, putting a strain on the social safety net and weighing on economic growth.
This demographic shift has profound implications for China's future. A shrinking workforce means slower economic growth and a smaller tax base to support a growing elderly population. The government has scrapped the one-child policy and introduced incentives to encourage couples to have more children, but these measures have had limited success so far.
The aging population presents a significant challenge for China's economic model, which has long relied on a large and growing workforce. Adapting to this new demographic reality will require significant reforms and a shift towards a more innovation-driven and productivity-focused economy.
Beyond the headline-grabbing statistics, a more subtle but equally significant factor is contributing to China's economic slowdown, a crisis of confidence. Years of breakneck growth had fueled a sense of optimism and a willingness to spend among Chinese consumers. However, this confidence has been shaken by the confluence of challenges facing the country.
The uncertainty surrounding the property market, coupled with rising youth unemployment and geopolitical tensions, has made consumers more cautious about spending. This decline in consumer confidence is reflected in sluggish retail sales and a drop in demand for big-ticket items like cars and appliances.
This confidence crisis is a major hurdle for the Chinese government, which has been trying to rebalance the economy away from investment and towards consumption. Without a rebound in consumer spending, it will be difficult for China to achieve sustainable and balanced growth in the long run.
Section 6. Trade wars and tensions. A geopolitical headwind. Adding to China's economic woes are mounting geopolitical tensions, particularly with the United States. The trade war initiated by the Trump administration, while somewhat eased under Biden, continues to cast a shadow over the global economy. Tariffs and trade barriers have disrupted supply chains and increased costs for businesses on both sides of the Pacific.
Beyond trade, the US and China are locked in a broader strategic competition, vying for influence in Asia and beyond. This rivalry has spilled over into areas like technology, with the US imposing restrictions on Chinese tech companies like Huawei. This geopolitical uncertainty is making businesses hesitant to invest and plan for the future, further weighing on economic growth.
While China is seeking to diversify its trading partners and reduce its reliance on the West, the US remains a crucial market and a source of key technologies. The ongoing geopolitical tensions are adding another layer of complexity to China's economic challenges and are likely to remain a headwind for the foreseeable future.
Section 7. Beijing's balancing act, stimulus versus reform. Faced with these mounting challenges, the Chinese government is walking a tightrope, trying to stabilize the economy in the short term while implementing long-term reforms. Beijing has announced a series of stimulus measures, including infrastructure spending and tax cuts, to boost growth and prevent a hard landing. However, these measures come with their own risks. Increased government spending could exacerbate China's already high debt levels while delaying much-needed structural reforms. The government is also wary of fueling another unsustainable boom-bust cycle in the property market. The key question is whether Beijing can strike the right balance between short-term stimulus and long-term reforms. Addressing the root causes of the slowdown, such as the property bubble and over-reliance on investment, will require difficult decisions and may involve short-term pain for long-term gain. Section 8. A global ripple effect, China's slowdown and the world. China's economic slowdown has profound implications for the global economy. As the world's second-largest economy and a major engine of global growth, China's troubles are being felt far beyond its borders. From commodity exporters in Africa to manufacturing hubs in Southeast Asia, countries that have benefited from China's insatiable demand are now feeling the pinch. The slowdown is also impacting global financial markets, as investors reassess their exposure to China and the risks associated with its economic outlook. A sharp downturn in China could trigger a global recession, as happened during the 2008 financial crisis. The world is watching China's economic trajectory with a mix of anxiety and hope. A successful transition to a more sustainable and balanced growth model would be a boon for the global economy. However, a prolonged slowdown or a hard landing would have severe consequences for everyone. Section 9. The future of the dragon, challenges and opportunities. China's economic slowdown is a defining moment for the country and the world. The challenges are significant and complex, but so are the opportunities. The Chinese government has a track record of overcoming adversity and adapting to changing circumstances. The path forward will require difficult decisions, structural reforms, and a willingness to embrace new ideas. China needs to transition from an investment-driven growth model to one that is more reliant on consumption, innovation, and high-quality growth. The world has a stake in China's success. A stable and prosperous China is essential for global peace and prosperity. The coming years will be crucial in determining whether China can navigate these challenges and emerge stronger on the other side.